Happy New Year. Welcome to Venture Capital. In the first show of 2014, we'll be looking ahead. What's in store for the Eurozone? Greece now holds the EU presidency. The Sochi Winter Olympics are less than a month away from now, so we'll be asking how the money spent on the Games can be made back. Business froze in the US as temperatures dropped. China goes cold on the Bitcoin, and another Russian bank bites the dust in corporate news. But first, let's get stuck in and start talking about Greece, because Greece took over the European Union's presidency this week. But instead of crowds of cheers, protests broke out from Greece, who resent what they see as EU interference, weak economic growth, high unemployment and strict austerity. Now, the Greek government has made it clear that there will be no more enforced austerity dictated upon the country from Brussels, with the Finance Minister Yanis Stonaras saying, just here you can see, it's simply too tough. Now, it's not just Greece, because Portugal has also hit out at the EU this week, with members of the country's parliament criticising EU lawmakers for their lack of flexibility and knowledge of local realities when referring to the levels of austerity expected on the economy. But despite all of this resentment, Latvia, the Eastern European country that's endured the worst financial fallout from the 2008 crash, has just welcomed the euro. So it can't be that bad then, or can it? Well, recent encouraging economic stats coming out of Europe, including we've got retail sales, it's sometimes hard to tell what exactly is going on. Now, let's get a better analysis from Nick Parsons from National Australia Bank. Nick, can you tell me what is in store for the Eurozone in 2014?
Well, the good news for the Eurozone in 2014 is it's going to be a lot better than it's been for the last couple of years. Unfortunately, that doesn't set the bar very high. Euroland only came out of recession in the second quarter of 2013, and even then the 2 quarters of growth we've seen have been only plus 0.3 and most recently plus 0.1. So statistically, we're going to call it a recovery. The economy should grow something like 1%, better than anything that we've seen for the last couple of years, but in absolute terms, not very good, and certainly not enough to bring down unemployment to anywhere near acceptable levels across the majority of the Eurozone.
And what about Greece? Let's rein in on that country for now, because of course it's got the EU presidency. What does that actually mean? Do you think that Greece is on to a better track, or is the track still broken?
Well, I think it's on track. The worry for Greece has got to be about the destination. And unfortunately, we've had 4 years of recession, very deep recession, which has seen GDP fall by somewhere between 25 and 30%. The economy is going to be repaired. Things, I think, will get gradually better. But there's little or no prospect of the Greek economy over the next 2 or 3 years getting back to anything like the sort of prosperity that it enjoyed prior to joining the single currency. So it's going to be a very, very long and very difficult journey. And the problem that Greece is going to face, and I think we'll hear more and more of this, is the fact that politically the governing parties have only got a very, very slim majority. They hold 153 seats out of 300 in the Greek parliament, and there are limits to what they can actually push through from here on in.
Can we mention the politics in the Eurozone in general? Because it seems like, in terms of the economics, it is slowly improving, as you mentioned. But the political situation, do you think the tensions are getting worse?
Well, politics is going to matter in 2014 more than it has done so for a couple of years. And the reason for that is that in May we have the elections for the European Parliament.
Yes.
Now, we've already seen in France in particular that there's a hardening of anti-EU sentiment. The far left and the far right together in France are polling at around 33% in the latest opinion polls. We're going to see, I think, these European parliamentary elections being the catalyst for a lot of anti-government demonstrations in Italy, in Spain and elsewhere. And I think politics is going to become more important in 2014 than it was at any point in 2013.
And something else I want to ask you, Nick, is deflation, because that's the word that seems to be doing the rounds at the moment. And it's curious because it's always been inflation that's been the concern. Is now deflation the concern? And if it is, why?
Deflation is coming very much onto the radar screen at the moment. Let's remind ourselves where we are. Core prices in Europe are increasing at a rate of just 0.7% year over year. Now, the ECB has got a target to deliver close to, but just below 2%. So inflation is lower than the ECB would like. The problem is that if falling inflation becomes falling prices, then there is a risk, and it's only a risk rather than an absolute certainty, but there's a risk that Europe slides into the kind of trap that Japan had in the 1990s, whereby consumers found it easier to postpone purchases of goods, equipment and services because they knew or felt that they would be cheaper at some point in the future. So the problem with deflation is that whilst on the one hand it can increase real incomes, which you would say is a positive, on the flip side it reduces any sense of urgency, and it means that consumers can be rewarded for postponing purchases rather than buying now. The problem with prices at just 0.7% year over year is it can take just 1 or 2 months shocks to take us below that zero level. So if you like, it's like an aeroplane almost approaching stall speed. There has to be a minimum level of inflation to give you comfort that we won't drop below the zero line, because if we do drop below the zero line, that could have some fairly negative consequences for businesses and for investors in credit markets across Europe.
Right, lots to look out for this year then, Nick, certainly. Thank you ever so much for that information.
You're
really
welcome.
Appreciate it. Nick Parsons there from National Australia Bank. It's now less than a month until the Winter Olympics kicks off in Russia's Black Sea resort of Sochi. Now, the city has undergone quite a transformation. 85% of the region had to be built from scratch at a grand total cost of $51 billion, making Sochi the most expensive Olympic Games in history. And one of the biggest money spenders is Russia's investment company Basic Element, responsible for the Olympic Village, a marina and revamping the airport at a total cost of $1.4 billion. Now, Venture Capital's Tanya Polyakova caught up with the company's CEO and asked what the government could do to get people to the country post the Games and help make those billions back.
One of the ideas is to open sky for all the international airlines to get to Sochi direct flights. There's a lot of interest in European airlines to go direct to Sochi and open regular flights. That will be trigger number one. The second one is that what we're thinking is to agree with the government that there will be a certain period of time, like 96 hours or maybe more, for a non-visa requirement, so that people can come from other countries without any visa requirement, or they can stamp a visa on the border or something like that. Simplified procedure. Hopefully it make it easier, because then you can have a long weekend idea. Why don't I go to Sochi and see where all these, famous Olympic Games took place? And then we see there's a lot of hidden demand, especially the short term after the Olympics. People would want to, those who would be shy to come for the event itself, they would be very keen to come after and test it, themselves in a calmer and more relaxed atmosphere. And there's a number of different ideas, and then also for internal travel as well. The children's camps, like the educational programs, different events. G8 is going to happen in Sochi after the Formula 1 is going to be a trigger event on a regular annual basis. Other events, and so Sochi should become, should kind of update its image. Sochi has, goes through a serious rebranding internally and externally, and if it happens successfully, there will be a lot of kind of movement there.
Oh, I like the sound of those visas getting easier to get a hold of. My friends and family will no longer have an excuse not to come and visit me if you're watching right now. Now, staying with Russia, Russians went back to work this week, so let's get involved with the corporate news and see what's been going on. So, the privatisation of Moscow's third largest airport, Vnukovo, has been approved. The government currently owns 3/4 of the hub, but plans to leave the stock entirely by 2016. And the long-awaited multi-billion-dollar deal between Russia's Gazprom and China's CNPC is said to be within reach, according to sources close to the company. The deal would satisfy China's energy demands for decades and transform Gazprom, funding a new pipeline system between Siberia and Vladivostok. And it's a bad start to the year for one of Russia's banks. Novoskuznetsk Municipal Bank has had its license revoked due to high risk and little reserves. 29 Russian banks were removed from the market in 2013 as the government continues its clampdown on the overcrowded industry. And the freezing temperatures the US has been enduring this week could cost the economy $5 billion. Temperatures plummeted to below zero in all 50 states, which meant people stayed at home, not venturing out to work or to the shops, so therefore very little productivity, and nearly 5,000 flights were either cancelled or delayed. Now, the last cold snap back in 2010 cost the country an estimated $28 billion, but that's because it lasted much longer, of course. Now, 2014 is set to be another controversial one for the Bitcoin. Oh, yes. The virtual currency has been banned by China's biggest online shopping group, Alibaba. Now, China is still the world's biggest user of the Bitcoin, but the government is clamping down on its usage. Now, this follows the central bank's ruling in December that prohibits any companies from handling Bitcoins. Now, the People's Bank of China said that the currency does not possess the attributes of a currency, such as legal repayments and enforcement abilities. Now, individuals, though, they are still free to buy and sell Bitcoin at their own risk. So I have a feeling that 2014 is going to be another roller coaster for the Bitcoin, that is for sure. And that is it for today's show. That is Venture Capital done and dusted, but I'm going to be on Twitter all week. So I'd like to invite you to join me on that one. Get involved with me. It's Katie Pilbeam, RT, and I'll see you next week. Goodbye for now. Have a great one.